Welcome back. Well, the markets are as flat as can be, but as promised, let's get chatting with the management of REC. Remember, they posted their results, which didn't look very great. The profitability was down by close to around 23%. The net interest margins and spreads as well have come in at the lowest we have seen in the last 19 quarters. To discuss the earnings, as well as what's the exposure to the Adani group of companies, we're joined by Mr. Ajoy Chaudhary, the Director of Finance of REC, who joins us. Good morning, Mr. Chaudhary. Thanks so much for waiting by. And it's been a long while since we have had you on the channel. So let's get a couple of aspects cleared out first. What is REC's exposure to the Adani group? And, if you could give us a couple of numbers on that front. Go ahead.
Yeah, good morning and thank you for having me on your show. Adani, we have outstanding loans of around 7,000 crores over 10 to 12 projects, largely renewable and some transmission projects. And total exposure, including undisbursed commitments, is 12,000 crores.
Okay, so total exposure you said is 12,000 crores, and 7,000 crores is what you have over 10 to 12 projects, correct?
7,000 crores outstanding loan as of now, and exposure, including the undrawn commitments, is 12,000.
All right, so exposure including the undrawn commitments is 12,000 crores. And can you give us an assessment of what the financial health of these projects is? I mean, are you, in terms of repayments, are you expecting any kind of default?
No, so far we have not experienced any default. They pay dot on time, and some of them, in fact, half of the projects are already commissioned, and there's a clear cash flow coming from the project. So we don't expect any sort of default as of now.
Okay, all right. So that's heartening to hear. Then let's focus on your numbers then, Mr. Chaudhary. As we said, your NIMs, well, they have moved to the lowest we've seen in multiple quarters. So given that the cost of borrowing is going up, maybe your yields as well are moving up, how do you weigh both these two? What is the margin that you should be looking at, say, for the coming year?
Okay, so, our margins have moderated, no question about that. We had a few rate reductions in the last couple of years, and the loans that are getting repriced as per the terms are getting fixed at lower rates. And in this current year, yes, the cost of incremental borrowing has gone up by around 50 basis points, and we have not raised our lending rate significantly, largely because of competitive reasons. But having said that, 3.5% of NIM is a fairly decent figure if you consider the other growth drivers. Sanctions are an all-time high, disbursement have picked up, credit quality is stable, and our CRAR is...
Mr. Chaudhary, Chaudhary, we get that 3.5% is not that bad, but can you hold on to it? With the cost of funds going up, do you believe what should be the margins that we should be working with? Go ahead, sir.
Yeah, so we believe that we can hold on to 3.5%, largely because now we have also moved on to non-power infra. So there the margins are slightly better. It is so we think we can hold on to 3.5%.
Okay, got that. I think the street likes what you're saying, the fact that, your exposure to the Adani group, despite it being over 7,000 crores, you're not expecting any default, payments are coming in on time, and also your margins, you're saying that you're holding on to 3.5% margins. Got that. Asset quality has been improving for REC, so that's another good thing. Can you tell us what are the resolutions in the pipeline, and do you expect further improvement in terms of asset quality?
Yes, we are very happy to how we have managed the asset quality, really. For the last 4 quarters, we have not added 1 rupee of bad loan to our books. We are very conscious of the kind of projects that we're taking and the kind of entity that we are dealing with. So, going forward, I think 23-24, we should have resolved around 70% of our bad loans. Some of the big projects are Lanco Amarkantak, KSK Mahanadi, Sinar project. So, and the rest, 30% will go in the 24-25. So I think, in a couple of years, we can expect an absolutely clean balance sheet. That's what we are working with.
Okay, all right. Mr. Chaudhary, I wanted some clarification. You briefly mentioned that Lanco Amarkantak Power project, right?
Yes.
Instead of lending, now I understand that you all are taking over that project and you're going to run it.
Yes.
What happened there? If there was no demand, then you're normally into financing. Suddenly, with no experience, you're going to be running this power project. So what is the capex you're going to be incurring for this? And what is the plan basically?
Yes. So Lanco Amarkantak is a pithead project where the coal source is very nearby, and two of the units are operational. So we expected a better resolution. So when it didn't happen, so REC and PFC have come together, and we have taken SJVNL on board as well. And so we have put up our own resolution. I think this is a very valuable proposition, Lanco Amarkantak, and with the power demand growing, this is surely going to give us good returns. So we will not directly probably do it. Maybe a subsidiary or a joint venture kind of arrangements will be made, and SJBNL will be the really the operating partner here.
Okay. Can you tell us what is the kind of disbursement growth that you're looking at in terms of power generation? I mean, you said the generation is very strong. You also said sanctions are at an all-time high. So in terms of renewable energy, transmission, generation, what kind of disbursement growth are you looking at for FY24?
Yeah, so, this year we are targeting, we have already made 60,000 crores of disbursement. So we are targeting close to 95,000 crore. That will be an all-time high figure. I mean, in 2021, we had made 93,000 crores. So this year, we hope that we shall surpass that figure. And if that happens, our AUM growth should be close to 10%.
Okay, AUM growth of 10% for FY23 and for 24?
24, I mean, almost similar growth figure.
10%.
Depending on how well, 10%. Depending on how well do we do with the infra projects, non-power.
Okay, all right. The other big aspect, Mr. Chaudhary, for the entire power sector has been that discoms have been paying their overdues by Gencos, right? And that is supposed to be very, very positive. It's come down from more than 1 lakh crore to 50-60,000 odd. My question to you is, have these overdue repayments, are they being funded by PFC and REC?
To some extent, yes, we have given them some support because these payables by the discoms are to be supported by subsidies. You see, these overdues have come out because the subsidies were not paid by the government in time. So we have supported them. These are government guaranteed loans, and it's only in 5 states I think we have given this support towards the past dues. So it's not too much, around 32,000 crores over a period of 4 years. This will go here.
Okay, I wanted to clear out one more thing. This incremental money that's being lent to discoms, is it higher that compared to the repayment of the overdues? Is that understanding correct?
No, it's not absolutely higher. It's well within the limit. It's basically the subsidies that will come from the government, and that will be paid off. And the current dues are all being paid by the discoms. So there is no issue on that. The past dues, which will be supported by the government. So it is well within the overall limit, and this is directly paid to the generation companies. It is not going to the discoms. It is on behalf of the...
Okay. All right, Mr. Chaudhary, we will leave it at that. Thank you for all of those clarifications. Very helpful, and all the best with the way forward. That's REC talking about how their exposure to the Adani Group stands to the extent of 7,000 crores, but there is no issue at all. The projects are cash generating, their payments are coming on time. There is absolutely no question of a default either. And of course, business is going very strong as well. But one thing that's not going very strong is Tata Steel. In fact, it's at the lowest point of trade, down about 4%. Nigel, how weak are the numbers?
Well, the numbers are weak, and it makes our call with the management even more important, because at noon today, the management will be speaking to us here on CNBC-TV18, and the street is waiting by for clarity, because the last quarter's numbers were very, very disappointing. To give you a couple of numbers, the consolidated EBITDA number that we were working with was close to around 5,000 crores. It came in closer to around 4,000 crores. So that's a 20% miss out there. What played out there? Well, 2 segments is what we look at. Geographic breakup. India EBITDA per ton, we were expecting a number close to around 12,000 rupees per ton. It came at around 10,500 rupees per ton. Though it improved by close to around 1,600 rupees on a sequential basis, but it still fell short of our expectations. What helped the India EBITDA per ton improve? One is the volumes were higher. The second factor is coking coal costs were lower. But your business continues to struggle because the EBITDA per ton that we were working with, the loss was close to $90. Well, it was even worse than that. It came in at $95 per ton. And the problem is, will Q4 as well get hit? There was a bit of an inventory write-down out there, but still the street is very, very disappointed with those numbers, and they didn't have any operating leverage because volumes were lower. Southeast Asia, well, it's been a drag. It's a very small part of their business, but yet again, very disappointing out there. And now, since the profitability is not improving, well, the debt reduction has suddenly come to a standstill. So there was no debt reduction on a sequential basis. Came in at around 71,700 crores. Also, the commentary with regard to pricing, lower input cost, and what is the debt reduction plan will be very, very important. We'll get at those answers in the next couple of hours.
And what about on Hindalco?
Well, Hindalco as well disappointing, but at least the street was bracing for a weak set of numbers, because in the last call of Novelis, well, the street said that, the management clearly said that this quarter is going to be weak. However, it was a little weaker than expected. On the top line itself, there was a degrowth of around 2% because volumes were down by close to around 2%. The shipments got hit because of destocking. Even there was in segments, there was some weak demand out there. Moving to the EBITDA number, well, that as well was very, very disappointing. If we look at the trend, only $340 million is what the adjusted EBITDA was. And the adjusted EBITDA per ton came in lower than even $400 per ton. Now, the management has said that in Q4, it recovers from around $375 per ton, closer to around $400 per ton. Remember, they didn't have operating leverage playing out here. The energy costs were high, and also the spreads were adverse to them. So that's why it was, far lower. But going ahead, maybe in the second half of FY24, you see the EBITDA go back to around $525 per ton. The debt as well moves up by around $100 million odd. So all in all, these numbers were disappointing, both from Novelis as well as Tata Steel.
All right, Nigel, thanks very much. Tata Steel and Hindalco in focus. Well, Adani Transmission is the other one which reported numbers. Vivek is here with a quick run through. Vivek.
Well, within the Adani group, Adani Transmission was the first company that came out with its results. We're expecting quite a few results today as well from the group. But Adani Transmission, a very good set of results, especially on the operational front. Like we told you, revenues went up almost 22% on a year-on-year basis. When you talk about the EBITDA, was very strong, up 64% on a year-on-year basis. Margins expanded 1,000 basis points, and profitability too, jumping almost 78%. Looking at the internals, what's actually happened is that when it comes to the transmission business, the transmission system availability was quite strong at over 99.7%. And within the distribution business, while the company did face some setback impacted by higher coal as well as power purchase prices, they managed to offset that quite significantly by fuel adjustment charges recovery as far as the monthly billing was concerned. Also, when you're talking about the distribution losses, they were reduced quite significantly to 5.6%. That's very good when you're comparing it to other power companies. And collection efficiency too was very strong, over 100%. On the back of that, the stock that started off on a weak note has actually been perched at the upper circuit limit of 5%, which was revised yesterday from 10% to 5%.
All right, thanks very much, Vivek, for that. By the way, the top 4 volume-led gainers today across the market, by the way, right, are Adani names. So that's quite a sea change. Enterprises 4.5%, Ports 4%, Wilmar 5%, and Transmission 5%. So all on the back of very strong volumes is what we are seeing. So this is a turn. Well, Muthoot Finance is the next company we are speaking with on the back of numbers. And gold tonnage has contracted. Assets under management have seen a rise. Remember, like we've been highlighting, gold financiers are losing business to banks, and AUM growth is in large part led by gold prices. George Alexander Muthoot is joining us as always, Managing Director of the company, to take some questions. Mr. Muthoot, great to have you with us here. Thank you very much for your time. Have you seen some improvement in the third quarter? Are things looking up a little bit compared to the previous so many quarters where, we have seen a fair degree of pressure? Go on, sir. Just describe the quarter for us.
Thank you and good morning. I think, as you said, we have seen some pressure in the last 4 quarters only. In the last 4 quarters, we are seeing some pressure. But now, as you also suggested, it is now waning. The pressures are coming down. We are able to grow our business. Maybe we have steadied the business. The AUM growth is steady. It's now steady. The profit is also steady. What we had a very good year last year, now we are able to regain that profit. And hopefully this year we should be able to do better. Or next quarter we should be able to do better than this quarter. AUM has also started inching up, of course, very slightly inching up. As you said, tonnage is a function of the gold price. When the gold price goes up, the tonnage should come down. But our AUM is slowly inching up. And so also our profit also has steadied. It is now a little over 900 crores for the quarter.
Okay, so you can safely say that the worst of the pressure is behind you, and AUM is inching up. About 1% is what you've seen in this quarter compared to last quarter in terms of growth. What is the AUM growth that you're expecting for the full year? And I know I've asked you this question before multiple times and you've denied it, but are you seeing any competition from banks? I mean, are you losing a lot of your customers to banks? Is that a trend that perhaps could worry you as well?
No, I think we're not losing any customers to banks. Banks are gaining new customers because our business has also not come down. But one thing which is gradually we are noticing is that the new players, whether it is the banks who have aggressively entered into the business or the new NBFCs who are trying to enter into the business, are starting to realize that gold loan business is not a bed of roses. See, they are, to my understanding, banks as well as NBFCs are starting to face issues with gold loans. When the growth goes up, all these issues start cropping up, and we are seeing that in some banks and in NBFCs. So probably I should say that the interest will also start waning for such people, because for gold loan business, a company has to be focused. It has to be focused on gold loan right through.
Sure.
Only you can sustain it.
What about the number on AUM growth? You were telling us that it's inching forward, but what is the kind of full year number that you're expecting?
Probably the 1% can go up to 5%. That I think that is what we should see in the end of the year.
5% AUM growth.
Yeah, I think that is what we should be able to see end of the year.
You know, Mr. Muthu, it's clearly a very competitive space. I'm looking at Federal Bank's gold portfolio, that's up by 19%. CSB Bank, they joined us a few days ago, that's up 45 to 50%. So clearly these banks are giving you a run for your money. Now, besides the numbers, what's your strategy? Are you looking at, going ahead and pulling back some of that market share or trying to grow out here? Will you sacrifice some NIM, some margins on that or on the yield front? What is the strategy from here on?
See, when you say growth, when the base is very low, a company with a base of 2,000 crores or 5,000 crores or 10,000 crores, when they say a big percentage, it's fine. But our base is quite big. We are a 56,000 crore base. So it's not that easy to grow on that base with two-digit, three-digit numbers, etc. So that is one part of the growth. So a big company with a big base, you cannot compare with a small company with a lower base. So strategy-wise, we have started, or we are in the process of doing more and more marketing, going out to customers, especially bringing back our customers who earlier were with us, who are not coming back to us, and also new set of customers. Our loan at home is actually picking up. So we are giving this facility to our customers so that we can pick up the gold from their branches. And it is our branch managers who go and do it, not third parties. So customers are very comfortable when our branch managers or staff, our own staff goes and picks up. So these are some initiatives we are doing. There are many other initiatives also. I think you can see those bearing fruit in the quarters to come.
Mr. Muthu, when you said that newer competitors are realizing, beg your pardon, but that banks and NBFCs are realizing that gold loans is not as you described it, a bed of roses. Do you have evidence to suggest that some people are pulling back? I mean, you noticed this first on the ground. Are we at all seeing that, or is that your perception? In what way? If you could just talk about that, because that's very important.
You see, it is just the impression I get from my managers on the field, my staff on the field, that their aggression or their very big appetite for gold loan business to grow, etc. In some banks, in some NBFCs, it is fading. Because definitely it is not, it's a, what should I say, it's a operationally very intensive business, operationally quite challenging and intensive. And people are just starting to realize only when the business or the AUM or the loan growth goes up. That's when all such issues crop up. So I don't want to go into details in that. So we will see that in the coming quarters.
Okay. So you said 5% AUM growth is for FY23 that you're expecting, right? Any targets that you have for FY24?
Not yet, madam. So let us cover the quarter 4 first, and then we'll go to the quarter 3. So we are
I
having
got that.
budgetary meetings also. We are having a budgetary meetings with our staff also this month and next month, and probably by end of March we should be able to go a target for them. So.
Okay. On the gold business, your tonnage continues to decline, and you were telling us that although you may not be losing customers to banks, banks are gaining a lot of the new customers, which would, I guess, they're taking away a bit from the pie, right, which could have been yours. So what are the strategies or what are the steps that you're undertaking in order to prevent both losing customers, old and new?
I said the new set of customers are also going to us, going to banks also. As I said, explained earlier, our strategy is to have more contact with our customers, maybe give them more and more things what they want, like as I said, loan at home, picking up the gold from their places, and that also we do it with our own people. That's a big difference we have, differentiator we have, and even the appraisals at the branch are done by our own people, unlike others who use third parties for this. So these are things which will help us, which will help retain customers, and customers will also feel happy that they are dealing directly with Muthoot and not to third parties. Those are the things which will have in the long run, which will help us. Those are some of the strategies. And there are a few other things also we are doing, but I don't want to elaborate on all those things. But see, in going forward, we should see such things bearing fruit.
All right. Mr. Muthoot, very briefly, I think we brought this up. I brought this up earlier, maybe a couple of interactions back. For investors who have sort of stuck with you, and the stock has, of course, suffered as the business has gone through this disruption of new competition, etc. Is the board considering any way to kind of reward them for waiting while things turn around? I mean, is there some sort of a corporate action on the anvil? Will you consider it? Have you considered it?
No, we have not considered anything like that. If what you're hinting at is some more dividend or some things like that. No,
yes.
We have not considered any such things in our board meeting. We just had our board meeting, etc. yesterday, and I'm sure the investors who are sticking on to us, who are with us, would definitely benefit, because you should realize that we listed our company 11 years back at 150, 160, and today it is 1,000 rupees. So those who have stuck with us or those who have remained with us have made money. But of course, there are some bips which happen, or some ups and downs which happen. I think the investors will also bear with us, and maybe as they stand with us. Muthoot, as a family also, we have not divested or sold any share till now. So the family is also staunchly behind this. I think investors would stand with the family.
All right. All right, Mr. Muthoot, absolutely. Good to hear that from you. Appreciate you joining in, as always, here on CNBC-TV18, your take on the business. And it's interesting what you tell us, that, maybe the numbers will bear it out, but your sense is that from your, of course, field on staff and field, that some of the competitive intensity is starting to taper off. 1,020, it's about 40-50 rupees off the day's low, which was, I think, about 980 or so today. We'll take a break here. On the other side, Mitesh will be joining in for a quick technical trading setup, some trading ideas with him when we return.
Well, let's go straight to Mitesh now to talk about the markets, which is not doing too much, actually, absolutely flat, but individual stocks are buzzing around. Mitesh, welcome back. What's on your radar?
So I have two stocks on my list. Bajaj Finance, I think, after a good correction, is now showing some signs of a reversal and a technical pullback in a rally. So that's a buy with a stop just below levels of 6,100, which is also the day's low. And I would look at targets of roughly around 62.75 to about 62.90 on the upside over here. And the other stock is Dr. Reddy's. While DVs has been on the corrective side and we have had sell calls over there, DRL is breaking out today. That's a buy with a stop below levels of 4,400 for targets of 45.60.
Got that. Any of these sort of look at these Adani names through the technical lens, Mitesh? Ports, Enterprises, Wilmar. How do they look up?
Prashant, yesterday I was talking about having positions in Adani Ports and ACC, I think, because of the option IVs and volatilities that had expanded and the premiums had also gone on the higher side. We'd done some covered calls before the Adani port stock had entered to ban, and both I think stocks we've booked out. I think they were very oversold and the pullback was expected. The only thing is that what extent do you get the pullback to now? We've exited the positions, that's the disclaimer. But Adani ports, my sense is that I think anything closer to about 610.15, I think would be the level where I think the stock might stop its pullback. Similarly, ACC, which is what I've been recommending as well, that can also give a continuous pullback to about levels of around 2100.
All right. Thanks a lot, Mitesh, for that. Let's do one thing. Let's slip into a quick break. On the other side, our special segment, it's the economy. Lata will connect with Badri Nivas NC from Citi from the sidelines of the Citi's India Investor Conference to discuss India's macro outlook. Stay tuned.